Question 1. Which of the following best describes the principle of indemnity in insurance? A. The insurer pays an amount greater than the loss to ensure the policyholder profits from the claim. B. The insurer provides coverage to protect the policyholder from any financial loss, regardless of the circumstances. C. The policyholder can only recover the actual financial loss, not exceeding the value of the insured item. D. The policyholder is required to cover the loss out of pocket, with the insurer reimbursing the full amount after a predetermined waiting period. Answer. C. Explanation. The principle of indemnity is designed to restore the policyholder to the same financial position as they were in before the loss, without allowing for any profit. The key point here is that the policyholder is not entitled to more than the actual loss sustained. Option is incorrect because indemnity does not involve providing more than the loss. Option B is incorrect as it contradicts indemnity by allowing recovery beyond actual losses. Option D is also incorrect since indemnity does not require the policyholder to pay upfront, with the insurer reimbursing later. Question 2. Mr. Smith is the insurance producer for a client who wishes to purchase life insurance. The client wants to buy a whole life policy with a rider that provides additional coverage for accidental death. Mr. Smith advises the client on the benefits of this rider, but the client is unsure whether it would be worth the additional premium. Which of the following is the most ethical course of action for Mr. Smith? A. Mr. Smith should persuade the client to purchase the rider as it will increase his commission. B. Mr. Smith should provide an objective explanation of the rider's benefits and costs, leaving the final decision to the client. C. Mr. Smith should advise the client to choose a different type of life insurance policy to lower their premium payments. D. Mr. Smith should not discuss the rider with the client unless the client explicitly asks for it. Answer. B. Explanation. The ethical responsibility of an insurance producer is to provide clients with clear, unbiased information that helps them make informed decisions. In this scenario, Mr. Smith should explain the rider's benefits and costs in an objective manner so the client can make an informed choice. Option is unethical as it prioritizes the producer's financial gain over the client's best interests. Option C is not the best choice because the client's preference for whole life insurance should be respected and there's no indication that different policy is necessary. Option D is also inappropriate since Mr. Smith should proactively discuss all relevant options with the client. Question 3. Which of the following is a primary responsibility of an insurance producer under the Idaho Code? A. The producer is responsible for adjusting claims on behalf of the insurer. B. The producer must offer insurance products only from companies with the highest commissions. C. The producer must ensure all information provided to clients is complete and truthful to avoid misrepresentation. D. The producer can offer lower premiums in exchange for a higher deductible without informing the client of the implications. Answer. C. Explanation. Under the Idaho Code, an insurance producer is required to provide clients with complete and truthful information to prevent misrepresentation. Misleading clients about the terms of an insurance policy is prohibited. Option is incorrect because adjusting claims is typically the responsibility of an adjuster, not the producer. Option B is unethical as the producer's duty is to serve the client's needs, not to promote products based solely on commissions. Option D is also incorrect because the producer must ensure the client is fully informed about the implications of any changes to their policy, including changes to premiums and deductibles. Question 4. Which of the following statements about underwriting principles in Idaho is correct? A. Underwriting is the process where the insurer determines the amount of insurance coverage to be provided without considering the risk of loss. B. Underwriting ensures that the insurer takes on high-risk policies without applying appropriate risk assessments or premiums. C. Underwriting guidelines are designed to evaluate the risk presented by the policyholder and help determine the appropriate premium. D. Underwriting is only concerned with the financial capacity of the insurer without regard to the individual policyholder's circumstances. Answer. C. Explanation. Underwriting involves assessing the risk presented by a policyholder to determine the appropriate premium and coverage. Insurers evaluate various factors such as health history, occupation, and lifestyle to assess the level of risk and set a premium that aligns with that risk. Option is incorrect because underwriting is directly tied to assessing risk. Option B is incorrect because underwriting ensures that insurers do not take on excessive risk without appropriate premium adjustments. Option D is incorrect as underwriting takes the individual's circumstances into account, not just the insurer's financial capacity. Question 5. MS Williams, an insurance producer, has just completed the renewal process for a client's homeowner's insurance policy. The client questions why their premium increased despite no claims being filed. Which of the following actions should MS Williams take to best address the situation? A. MS Williams should avoid discussing the rate increase, as the insurer is responsible for determining premiums. B. MS Williams should explain the possible factors influencing the premiums, such as changes in the local risk environment, inflation, or coverage adjustments. C. MS Williams should simply apologize and offer to cancel the policy for the client. D. MS Williams should advise the client to seek a policy with another insurer as rate increases are inevitable. Answer. B. Explanation. When a client questions a premium increase, the producer has an obligation to explain the factors that contribute to rate changes. These factors may include changes in the local environment, e.g., increased natural disaster risk, inflation, or modifications to the policy's coverage or terms. Option is incorrect because it's essential to communicate transparently about rate changes. Option C is inappropriate since the producer should explain the reasoning rather than offering to cancel. Option D is not the best solution because the producer should work to explain the change and explore alternative options if necessary, but not simply advise cancellation. Question 6. Which of the following types of insurance is required under Idaho law for employers with employees? A. Property insurance. B. General liability insurance. C. Workers' compensation insurance. D. Auto insurance. Answer. C. Explanation. Idaho law requires employers with employees to carry workers' compensation insurance to cover medical expenses and lost wages in the event of a work-related injury or illness. Property insurance, option A, and general liability insurance, option B, are not mandatory under Idaho law for employers, while auto insurance, option D, is often required for vehicles. It is not a legal requirement for employers unless the vehicle is used for work purposes. Question 7. Under Idaho law, which of the following actions is considered an unfair trade practice for an insurance producer? A. Providing clients with detailed explanations of policy options and their costs. B. Offering a policy with more coverage than necessary to ensure the client is fully protected. C. Offering a policy to a client in a misleading way that may cause them to purchase coverage they don't need. D. Recommending policy that is priced higher due to more comprehensive coverage. Answer. C. Explanation. Offering a policy in a misleading manner that causes a client to purchase unnecessary coverage is considered an unfair trade practice under Idaho law. Producers have an ethical obligation to provide accurate and clear information about policies. Option is not an unfair trade practice as it involves providing transparency. Option B is not unethical if the producer believes the additional coverage is in the client's best interest. Option D is acceptable as long as the producer provides clear reasoning for the high-priced policy based on the coverage it offers. Question 8. An insurance producer in Idaho is prohibited from engaging in which of the following practices? A. Providing clients with quotes based on their stated needs and preferences. B. Accepting a referral fee from an unrelated third party for a successful policy sale. C. Sharing information about policy options and their benefits with clients. D. Charging an administrative fee for processing claims as long as it's disclosed. Answer. B. Explanation. In Idaho, it is prohibited for an insurance producer to accept a referral fee from an unrelated third party for a successful policy sale. This is considered a conflict of interest and violates ethical standards. Option is allowed as long as the quotes are accurate and based on the client's needs. Option C is allowed and encouraged as it helps the client make an informed decision. Option D is acceptable as long as the fee is properly disclosed and follows legal guidelines. Question 9. What is the primary purpose of continuing education requirements for insurance producers in Idaho? A. To ensure that producers are kept up to date with changes in insurance laws and regulations. B. To give producers additional opportunities to sell more policies. C. To allow producers to raise their commissions and increase their sales. D. To help producers expand their client base through marketing techniques. Answer A. Explanation. The primary purpose of continuing education requirements for insurance producers is to ensure that they stay informed about changes in insurance laws, regulations, and best practices. This ensures that producers maintain their competency and professionalism. Option B is incorrect because continuing education is not focused on increasing sales. Option C is not the purpose of continuing education. Its focus is on maintaining knowledge. Option D is incorrect, as the focus is on regulatory knowledge rather than marketing strategies. Question 10. Which of the following is true regarding policy cancellations in Idaho? A. Insurers can cancel a policy at any time without providing a reason. B. Insurers must provide policyholders with a notice of cancellation, including the reason, within 30 days of the cancellation. C. A policyholder can cancel a policy at any time, and the insurer is obligated to refund the entire premium. D. Insurers can cancel a policy only after the policyholder has made a claim. Answer B. Explanation. Under Idaho law, insurers are required to provide notice of cancellation to the policyholder and must include the reason for the cancellation. This notice must typically be given 30 days before the cancellation takes effect. Option is incorrect because insurers cannot cancel without providing proper notice and reasons. Option C is incorrect because while policyholders can cancel their policies at any time, insurers are not always required to refund the full premium, especially if the policy was in force for a significant period. Option D is incorrect because cancellations can happen for reasons unrelated to claims, such as non-payment of premiums. Question 11. Under Idaho law, how long does an insurer have to pay a claim after receiving proof of loss from the insured? A. 10 days. B. 20 days. C. 30 days. D. 60 days. Answer C. Explanation. Idaho law requires insurers to pay a claim within 30 days after receiving proper proof of loss. This ensures timely payment to policyholders. Options A, B, and D are incorrect timeframes based on Idaho regulations. Question 12. Which of the following is an unfair claims settlement practice under Idaho insurance regulations? A. Offering to settle a claim quickly at the agreed-upon policy limits. B. Denying a claim without conducting a reasonable investigation. C. Requiring the insured to provide proof of loss. D. Requesting additional documentation for claim verification. Answer B. Explanation. Denying a claim without a proper investigation is considered an unfair claims settlement practice. Idaho law requires insurers to conduct reasonable investigations before denying claims. Options A, C, and D are standard practices that insurers may follow to ensure claim accuracy. Question 13. Which of the following best describes twisting in insurance? A. Replacing a policy with a new one that benefits the policyholder. B. Misrepresenting a policy to induce the policyholder to switch to another insurer. C. Offering a discount for purchasing multiple policies. D. Sharing policyholder information with unauthorized third parties. Answer B. Explanation. Twisting is an illegal practice in which an insurance producer misrepresents a policy to convince a policyholder to replace it with another policy, often to the detriment of the policyholder. Option A can be legal if the replacement benefits the policyholder. Options C and D do not describe twisting. Question 14. In Idaho, how many hours of continuing education must a licensed insurance producer complete every 2 years? A. 12 hours. B. 18 hours. C. 24 hours. D. 30 hours. Answer C. Explanation. Idaho requires insurance producers to complete 24 hours of continuing education every 2 years, with at least 3 hours dedicated to ethics. Failure to meet this requirement can result in license suspension or revocation. Question 15. A policyholder in Idaho wants to cancel their auto insurance policy. What is the minimum notice the policyholder must give the insurer to cancel the policy? A. No notice required. The policyholder can cancel immediately. B. 7 days. C. 15 days. D. 30 days. Correct answer A. Explanation. In Idaho, a policyholder can cancel an insurance policy at any time without giving advance notice. However, the insurer may require written confirmation of cancellation. Question 16. Which of the following is a permissible reason for an insurer to cancel a homeowner's insurance policy in Idaho? A. The policyholder moved to another state. B. The insured property has not been inspected within the last year. C. The policyholder failed to pay the premium. D. The insured property is over 50 years old. Answer C. Explanation. Failure to pay the premium is a legitimate reason for an insurer to cancel a homeowner's insurance policy. Options A, B, and D are not valid reasons for cancellation under Idaho law. Question 17. Which of the following discriminatory practices is prohibited under Idaho insurance law? A. Charging different premiums based on driving history. B. Refusing to issue A policy based on the applicant's occupation. C. Offering low rates to policyholders who bundle policies. D. Denying coverage due to an applicant's past claims. Answer B. Explanation. It is illegal for insurers in Idaho to refuse to issue a policy based solely on an applicant's occupation, as this constitutes unfair discrimination. Option is legal because driving history is legitimate risk factor. Option C is common industry practice. Option D is allowed if the past claims indicate higher risk. Question 18, scenario based. Mark, an insurance producer in Idaho, is reviewing a potential client's application. He notices that the client has intentionally left out important information about previous claims. Mark decides to proceed with the application without correcting the omission. Which of the following best describes Mark's actions? A. Churning. B. Misrepresentation. C. Twisting. D. Rebitting. Answer B. Explanation. Mark's actions constitute misrepresentation because he knowingly allows incorrect or incomplete information to be submitted on the application. Churning. A. Refers to excessive policy replacements to earn commissions. Twisting. C. Involves convincing a policyholder to switch policies based on false information. Rebasing. D. Involves offering an unauthorized incentive to buy a policy. Question 19. How long must insurers in Idaho maintain records of all claims and policies after the termination of coverage? A. 1 year. B. 3 years. C. 5 years. D. 7 years. Answer C. Explanation. Insurers in Idaho are required to keep records for 5 years after a policy terminates or a claim is settled. This ensures that records are available for regulatory review if needed. Question 20. Which of the following statements about rebitting in Idaho is correct? A. Rebitting is allowed as long as the policyholder agrees to it in writing. B. Rebitting is legal if it results in a lower premium for the policyholder. C. Rebitting is prohibited and can result in disciplinary action against the producer. D. Rebitting is only allowed for long-term policies. Answer C. Explanation. Rebasing, offering an unauthorized incentive to buy a policy, is strictly prohibited in Idaho and can result in penalties or disciplinary action against the producer. Options A, B, and D are incorrect because rebasing is not allowed under any circumstances. Question 21. Which of the following statements about binders in Idaho is correct? A. Binders are valid for a maximum of 90 days. B. Binders must be issued in writing to be valid. C. Binders are temporary contracts that provide insurance coverage until a policy is issued. D. Binders can be used to waive policy exclusions. Answer C. Explanation. A binder is a temporary insurance contract that provides coverage until the formal policy is issued. It can be issued orally or in writing. Options A and B are incorrect because Idaho does not limit binders to 90 days and they do not always need to be in writing. Option D is incorrect because binders do not waive policy exclusions. Question 22. In Idaho, a life insurance policy can be reinstated after it has lapsed if the policyholder does which of the following? A. Pays the overdue premium within 12 months of the lapse date. B. Provides proof of insurability and pays all overdue premiums with interest. C. Files a reinstatement application within 30 days of the lapse. D. Pays a penalty fee and agrees to higher premiums. Answer B. Explanation. In Idaho, a life insurance policy can be reinstated if the policyholder provides proof of insurability and pays all overdue premiums with interest. Options A, C, and D do not meet the legal requirements for reinstatement. Question 23. Under Idaho law, which of the following is required for a producer's license renewal? A. Completing 10 hours of continuing education every year. B. Filing a financial statement with the Department of Insurance. C. Paying the renewal fee and completing 24 hours of continuing education every 2 years. D. Passing a renewal exam every 5 years. Answer C. Explanation. To renew a producer's license in Idaho, the producer must pay the renewal fee and complete 24 hours of continuing education, including 3 hours in ethics every 2 years. Options A, B, and D do not reflect the correct licensing renewal requirements. Question 24. What is the minimum liability coverage required for auto insurance in Idaho? A. $10,000 for bodily injury per person, $20,000 per accident, and $5,000 for property damage. B. $25,000 for bodily injury per person, $50,000 per accident, and $15,000 for property damage. C. $30,000 for bodily injury per person, $60,000 per accident, and $25,000 for property damage. D. $50,000 for bodily injury per person, $100,000 per accident, and $50,000 for property damage. Answer B. Explanation. Idaho requires minimum liability coverage of $25,000 per person, $50,000 per accident for bodily injury, and $15,000 for property damage. Question 25. If an insurer in Idaho fails to acknowledge a claim within a reasonable time, it is considered A. minor infraction, B. an unfair claims settlement practice, C. a legal action by the insured, D. a breach of the insurance contract. Answer B. Explanation. Failing to acknowledge a claim within a reasonable time is an unfair claims settlement practice under Idaho law. Insurers are expected to handle claims promptly and fairly. Question 26. Which of the following is considered an exempt transaction under Idaho insurance law? A. An unsolicited offer to purchase a policy from an agent. B. A sale of a life insurance policy to an immediate family member. C. The renewal of an existing policy without changes. D. The sale of a policy to a non-resident of Idaho. Answer C. Explanation. The renewal of an existing policy without changes is considered an exempt transaction under Idaho insurance law. Options A, B, and D are not classified as exempt transactions. Question 27. Which of the following actions would be classified as rebidding under Idaho law? A. Offering a policyholder a discount for bundling multiple policies. B. Providing a policyholder with a gift valued at $25 after purchasing a policy. C. Offering a lower premium rate based on the applicant's credit score. D. Paying the first premium payment on behalf of the policyholder. Answer D. Explanation. Rebating occurs when an agent offers a financial incentive such as paying the first premium to encourage someone to purchase an insurance policy. Options A, B, and C are legal practices and do not constitute rebidding. Question 28. Scenario-based. Jessica, an insurance producer in Idaho, learns that her client, Tom, has recently purchased a new vehicle. Tom wants to ensure his new car is covered, but he has not informed his insurer. Jessica advises Tom to report the vehicle to his insurer within the legally allowed time frame to ensure coverage. How many days does Tom have to report his new vehicle to his auto insurer under Idaho law? A. 7 days. B. 14 days. C. 30 days. D. 45 days. Answer B. Explanation. In Idaho, a policyholder must notify their insurer of a newly acquired vehicle within 14 days to ensure it is covered under their existing policy. Question 29. Which of the following is required for an insurer to cancel a commercial insurance policy in Idaho? A. The insurer must provide written notice at least 10 days before the cancellation. B. The policyholder must agree to the cancellation in writing. C. The insurer must provide written notice at least 45 days before the cancellation. D. The insurer can cancel without notice if the premium is not paid. Answer C. Explanation. In Idaho, insurers must provide written notice at least 45 days before canceling a commercial insurance policy except for non-payment of premium, which requires a 10-day notice. Question 30. Which of the following best describes coercion in the insurance industry? A. Forcing a policyholder to purchase additional coverage. B. Misrepresenting a policy's terms and conditions. C. Refusing to renew policy based on the policyholder's claim history. D. Offering policyholder rebate to encourage purchase. Answer A. Explanation. Coercion occurs when an agent or insurer forces or pressures a policyholder to purchase additional coverage or a specific policy. This practice is illegal in Idaho.